Good day everyone and welcome to our new series, Tax 101 Guide in Income Taxation, where we can talk about anything under tax. Taxation is the process or means by which the sovereign, through its lawmaking body, imposes burdens upon subjects and objects within its jurisdiction for the purpose of raising revenues to carry out the legitimate objects of government. Taxes, on the other hand, are the enforced proportional contributions or charges from persons and property levied by the state's lawmaking body by virtue of its sovereignty for the support of the government and all public needs. The power to tax is deemed inherent in a sovereign state under American jurisprudence since it is a necessary attribute of sovereignty. No sovereign state can survive or endure without this power. No sovereign state can continue to exist without the means to pay its expenses, and for those means, it has the right to compel all citizens and property within its limits to contribute, hence the emergence of the power to tax. The power of taxation refers to the power by which the state raises revenue to cover the necessary expenses of the government. There are two main purposes of taxation: primary and secondary. Primary refers to revenue or fiscal purpose. The primary purpose of taxation on the part of the government is to provide funds or property with which to promote the general welfare and the protection of its citizens and to enable it to finance its various activities. Examples of taxes imposed for raising revenues are income tax and business tax. Secondary refers to regulatory purpose. Taxation is often employed as a device for regulation or control. Also refers to the implementation of state's police power, by means of which certain effects or conditions envisioned by the government may be achieved, such as promotion of general welfare, reduction of social inequality, and economic growth. Police power is the power of the state for promoting public welfare by restraining and regulating the use of liberty and property. Essential elements of a tax. First, it is an enforced contribution. This payment of tax is not voluntary payment or donation, but rather an imposed contribution exacted by the legislative authority. Second, it is a tax burden payable in money. Third, it is proportionate in character. Payment of taxes should be based on the ability to pay theory or theoretical justice. Theoretical justice or equity, also known as the ability to pay principle. It refers to taxpayers' ability to pay must be taken into consideration. The tax burden should be proportionate to the taxpayers' ability to pay. Fourth, it is levied on persons, property, or the exercise of a right or privilege. Fifth, it is levied by the lawmaking body of the state. Sixth, and last, it is levied for public purpose. What is income tax? An income tax is a regulatory tax levied on an individual's or corporation's taxable profit. Individual income tax is determined based on the amount of income received. It is generally classified as a direct tax because the burden is carried by the individuals who pay it. Should I pay tax? Well, according to the Bureau of Internal Revenue, if you are a Filipino citizen living in the Philippines, receiving income from sources within or outside the Philippines, whether you are an employee employed by two or more employers at any time during the taxable year, self-employed individuals, or individuals deriving mixed income, you must file an income tax return. Non-resident citizens and aliens are also subject to income tax on income generated in the Philippines only. When do I pay tax? The Philippine Annual Income Tax Return, BIR Form 1700, is filed and taxes are due to the Philippine Bureau of Internal Revenue on or before April 15 of the year following the applicable calendar year. You should file your income tax return on the 15th of April every year following the close of a taxable year. Thank you for staying with me today, and I look forward to seeing you on our next episode. Stay well and don't forget to pay your taxes. Adios!